BOJ policymaker vows to hold extremely low fees, warns of economic dangers. Tokyo. The Bank of Japan should preserve big stimulus to support an economy going through a resurgence in COVID-19 infections and slowing international demand, one in all its board member mentioned, reinforcing the BOJ's outlier repute in a worldwide wave of monetary tightening. BOJ board member Toyoaki Nakamura said on Thursday the outlook for Japan's economy was clouded by means of a renewed spike in pandemic instances, lingering delivery constraints and chronic rises in international commodity prices. Market jitters over competitive hobby charge hikes by way of main crucial banks to rein in rampant inflation could also trigger an outflow of capital from rising economies, and hurt global increase, Nakamura brought. Such dangers, and the truth Japan's output gap remains negative, justify preserving monetary coverage ultraloose, he mentioned. Japan's economy is still within the midst of improving from the pandemic-induced stoop, Nakamura instructed a speech. Shifting to an economic tightening stance, at a time while demand stays brief of deliver, might harm the economy and act as a large restraint to household and business enterprise interest, he said. The BOJ has kept away from becoming a member of a flurry of hobby fee hikes by using crucial banks scuffling with report surges in expenses, as it makes a speciality of supporting Japan's behind-schedule recovery from the pandemic's hit. Japan's patron inflation, at 2.4%, is tons lower than the charge of over 8% visible within the United States and Europe due in large part to gradual wage growth, Nakamura mentioned. With current charge profits pushed primarily by means of rising uncooked material expenses, Japan should cope with the impact through targeted financial measures rather than economic tightening, he introduced. While core customer inflation may boost up toward year-end because of rising fees of strength, meals and sturdy goods, this sort of enhance will in all likelihood burn up, Nakamura mentioned. Japan isn't but in a situation in which it is able to obtain our rate goal in a sustained, strong fashion, he mentioned, stressing the need to keep ultra-low interest prices. The BOJ has deployed a massive amount of stimulus for almost a decade to fire up inflation to its 2% goal, and maintains to cap long-term interest charges around zero to aid the economy.